Ladies and gentlemen, good day and welcome to Ester Industries Limited's Q2 and H1FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Desa from CDR India. Thank you, and over to you, sir.
Thank you, Neerav. Good day, everyone, and a warm welcome to Ester Industries Q2 and H1 FY25 Analyst and Investor Conference Call. We have with us today Mr. Arvind Singhania, Chairman and CEO, and Mr. Pradeep Kumar Rustagi, Executive Director, Corporate Affairs. We will begin this call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that few statements made in today's discussions may be forward-looking in nature, and a note to this effect was sent in the invite to you earlier. We trust you have had a chance to go through the documents on financial performance. I would now like to invite Mr. Arvind Singhania to make his opening remarks. Over to you.
Thank you, Gavin, and thank you everyone for joining us today. I will briefly talk about the key business developments, post which Pradeep will walk you through our financial performance. We are pleased with our performance for the quarter under review, driven by improved operating and financial matrices and a better macro environment for both BOPET films as well as specialty polymer. This is in line with our expectations that we shared with you all in previous calls. We expect H2 to be better than H1, as both the businesses are expected to sustain their momentum. Let me now move on to individual businesses. Starting with specialty polymers, Q2 performance was steady on expected lines. We have seen a good pickup in volumes on year-on-year basis. Demand for our marquee products, namely MB03 and innovative PBT, remain buoyant. For the quarter, our overall volume of sales stood at 1,216 metric tons, almost double when compared to volume of sales of 599 metric tons achieved in Q2 financial year 24. On a half-yearly basis, volume stood at 2,198 metric tons compared to 1,125 metric tons achieved in half one FY24. Again, almost 2x on a year-on-year basis. In terms of our key products, MB03 volume stood at 284 metric tons during Q2 FY25, as again 179 metric tons during Q2 FY24. Volume of sales of innovative PBT for Q2 FY25 stood at 476 metric tons, as again 185 metric tons of Q2 FY24. Specialty polymers, as mentioned in the past, is largely an export-oriented business, deriving a significant portion of its sales to customers based out of USA and China. The end use of these products is mainly for carpet and consumer electronics industry based in USA. From margin and profitability perspective, the business is largely insulated given the IP protection available for major products. Going forward, we expect H2 to sustain momentum amidst exciting product pipeline and growth visibility. Moving to the film business now, I'm extremely pleased to report that we are now witnessing an improved demand-supply scenario, which in turn is translating into better pricing and margin move environment. Significant new capacities commissioned over the last 2 years resulted in massive oversupply that put pressure on pricing and margins in BOPET films. However, the growth in demand both within India and across the world remained robust on account of growth in application segments, enhanced consumerism and growing GDP. Our volume of sales during the quarter under review was affected by the plant shutdown undertaken for a couple of weeks. Despite lower volume, we were able to achieve improved margins and deliver significantly better profitability, largely owing to improved demand-supply scenario and better product mix. As I have been highlighting, our efforts are directed towards improving our product mix by increasing the share of value-added and specialty products. I am pleased to share that on a consolidated basis, we have been able to increase the share of value-added products to 29% during the quarter, as against 17% in Q2 FY24. Our wholly owned subsidiary, Ester Filmtech, generated revenue of 99 crores with volume of 7,425 metric tons during the quarter. We expect the entity to deliver revenues of approximately 375 crores in current fiscal and 450 to 500 crores upon achieving optimal utilization at reasonable price margins during next fiscal. Further, in addition to improving demand-supply environment and better product mix, plastic waste management rules mandating utilization of minimum 10% recycled content in flexible packaging laminates coming into force from 1st of April 2025 is expected to further increase demand for polyester film, with conversion taking place from other substrates to polyester. As regards our JV with Loop Industries Inc., I am happy to inform you that it is progressing well, and an entity by the name of Ester Loop Innovative Technologies Private Limited has been incorporated. Teams having members from both Ester and Loop have been formed for implementation of the plan and look after key functions like detail engineering, project setup, raw material procurement planning, financing, etc. Our target timeline is to commence commercial production in the second quarter of calendar 2027. In summary, we anticipate a significantly better operating and financial performance during the current fiscal as compared to the fiscal gone by. Specialty polymers highlighted its resilience and potential during the first half. Similarly, the outlook for the film business on the back of a more stable environment is promising. We are confident that both our SBUs are primed for growth and value creation. The partnership with Loop, a transformative and path-breaking endeavor, is set to drive profitable expansion for the company in the future. That concludes my opening remarks. I now hand over the floor to Pradeep to walk you through our financial performance. Over to you, Pradeep.
Thank you and good day, everyone. Thank you for joining us on our Q2FY25 earnings call. Let me quickly walk through our financial performance, post which we can commence the Q&A session. I would like to start with financial performance of Ester Industries. Total income on a standalone basis stood at rupees 302 crores as against rupees 244 crores in the corresponding quarter last year, higher by 24%. The primary reason for the growth is the strong revival in both specialty polymers and film businesses. EBITDA during the quarter under review, including non-operating income, stood at rupees 36 crores as compared to rupees 3 crores during Q2 FY24. In percentage terms, it stood at about 12% as compared to 1% during Q2 FY24. EBITDA during H1 FY25 stood at rupees 53 crores as compared to rupees 15 crores during the corresponding half last year. Coming to financial performance of wholly owned subsidiary Ester Filmtech, the revenue stood at rupees 99 crores as against rupees 68 crores in the corresponding quarter last year, higher by 46%. Basis strong revival in film business. Reported EBITDA during the quarter under review, including non-operating income, stood at rupees 6 crores as compared to negative of rupees 3 crores during Q2 FY24. EBITDA for the Q2 FY25 would have been rupees 15 crores, that is 14%, but for impact of exchange fluctuation and mark-to-market losses on SCL and derivatives availed by Ester Filmtech. EBITDA during H1 FY25 stood at rupees 7 crores as compared to negative of rupees 6 crores during the corresponding half year last year. The same would have been rupees 15 crores, but for the impact of exchange fluctuation and MTM on SCL derivative availed by Ester Filmtech. In terms of sales in volumetric terms, Ester Filmtech sold 7,425 metric ton of film during Q2 FY25. With the pricing and margin trend improving and demand-supply mismatch narrowing, we are confident that Ester Filmtech will contribute positively to the overall growth of the business in coming years due to its low operating cost. We expect the unit to generate revenue worth rupees 450 to 500 crores upon achieving optimal utilization by FY26. On consolidated basis, EBITDA for the quarter stood at rupees 43 crores as against negative of 0.4 crores generated in Q2 FY24. On half-yearly basis, we could earn EBITDA of rupees 60 crores as compared to 9 crores earned during H1 FY24. EBITDA for the quarter and half year would have been higher by 8 crores, but for impact of exchange fluctuation and MTM on FCL derivative availed by Ester Filmtech. On consolidated basis, we could earn PAT of rupees 3 crores as compared to loss of 30 crores incurred during corresponding quarter last year. PAT of rupees 3 crores would have been higher by 8 crores, but for the impact of exchange fluctuation. Liquidity position at consolidated level remains strong, as can be seen from the cash flow statement for the half year ended September 24 provided in the investor presentation. Leveraging in terms of net debt, EBITDA multiple is also improving with improved operating performance. All our accounts with all the lenders remain in order. In fact, we have repaid installments of some loans ahead of schedule. We are also maintaining more than adequate headroom in working capital credit lines sanctioned to us by banks. For funding JV, Ester Industries has come out with the issue of share warrants through preferential route amounting to rupees 175 crores. We have received the requisite approval from both BSE and NSE. 25% of the issue amount, that is rupees 43.75 crores, is expected to be received in the next few days from promoters and other independent investors. As stated by Arvindji, we have confidence in the growth potential and value creation of both our businesses. Especially polymer has showcased its growth capabilities, and the film business is showing improved performance with a positive pricing and margin trend. The robust growth in demand for BOPET film is aiding in balancing the demand-supply dynamics. Our partnership with Loop Industries is poised to be a game changer. When operational, it is expected to substantially alter our growth trajectory and profitability. That concludes my opening remarks, and we can now commence the Q&A session.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Krishna Pare from Dolat Capital. Please go ahead.
Thank you for the opportunity, sir. My first question is, what are the present contributions for BOPET, and where do you see them progressing over the next year?
The current value additions that we have is about 45 rupees per kg for 12 micron plane.
Over PT and MEG.
Over PT and MEG.
Okay.
It's expected to be in the same ballpark going forward as well.
Okay. Second is, what is the maximum utilizations can we achieve at Ester Film Tech?
When? In what period?
In next year?
Oh, next year will be substantially better than this year. If we talk about FY26, I think we should be in the range of about 75 to 80%, maybe even 85%.
And H2 we could be 65 to 70%. H2 of this fiscal.
Okay, got it. And what will be the annual revenues and margins do you foresee from our Loop JV?
Sorry, say again?
Annual revenues and margins do we foresee from our Loop JV?
No. See, please understand that JV is a completely separate company.
Mm-hmm.
Right? So in the Loop JV, the JV company is the capital expenditure is in the range of about $165 million, which is about 1,450 crores of rupees. We expect revenues to be in the same region, say about 1,500 crores, and the EBITDA margins will be in the region of about 35%.
Okay, and what are the competing technologies available?
As of now, we don't see any technology which is ready to be deployed commercially, globally.
Okay, got it. Thank you. That's it from my side.
Thank you. Next question is from the line of Jatin Damania from Swan Investments. Please go ahead.
Thank you for the opportunity. So, Congress on which set of...
Jatin, sorry to interrupt you.
Please, your voice is echoing. Can't understand.
Yeah, so now it's audible?
Yes.
Yeah, that's right.
Yeah. So, sir, in your opening remarks, you alluded that there is an oversupply in the BOPET market. But despite that oversupply, we have seen a significant improvement in our spreads across both the businesses. So, can you help us understand what is the demand-supply scenario that we are seeing as compared to the past year, and how shall we foresee going ahead?
So, as far as the specialty polymer business is concerned, there is no oversupply. It was a demand problem arising out of the recessionary situation in the US, which has changed. Now the demand has picked up. So there is no oversupply in the specialty polymer business. The oversupply was only in the polyester film business, which over the last 2 years has improved substantially. Now the demand supply has closed quite a bit, And I think in the next 12 to 18 months, this will be completely balanced.
Yeah, but in the last con call, we indicated that the demand supply has narrowed down to almost 15,000 tons on a monthly basis. So like to like basis, if someone wants to compare it, so what is the number right now?
Yeah, so right now the demand supply gap would be in the region of about 15%, 20% max.
So that will continue to remain in the same level only.
No, it will keep improving because the demand is going to continue to grow while there are no new major capacities expected. So the demand supply will become better and better over the period of time.
There are two triggers. One is the continuous growth in demand in the domestic market, which is expected to be in the 11 to 13% range, and the global demand at about 6%. And then from 1st April onward, the plastic waste management rule is likely to trigger a spurt in demand.
Mm-hmm. Okay. So, sir, now the demand, since there is no new incremental supply that is going to hit in BOPET as of now, and with the demand improving by probably a higher single digit globally, don't we expect the spreads over MEG and PTA to improve from 45 rupees a kg that what we reported in the last quarter?
See, please understand, this is domestic demand. This is domestic supply. Globally, the situation is different because a lot of capacities are coming up in China, and the global demand supply is going to take a little bit longer, but it is not going to affect our domestic demand supply. So the domestic will be very good, but the pricing of the export market is not going to be that lucrative as it used to be before. But we expect to, just to be a little bit more prudent, we don't expect our margins to go up substantially over the existing 45 or 50 rupees.
Okay, so one should work with the numbers
because imports.
Hari, boliye.
Yeah, so you were saying something on the import numbers.
No.
Hello?
Hari, please go ahead.
No, sir, you were saying something on the imports.
No, nothing. That is nothing.
So now when you said that on the specialty, we don't see any problem, but because the demand now started it improved. But since our specialty doesn't have any competition and margins was also protected, despite that and improvement in the BOPET, we have seen a decline in specialty polymer business margin on a sequential basis. So what was the reason for that?
Very simple. Actually, in this quarter, we got a one-off business of a product in the domestic market at very, very low margins. It is a one-off business. We decided to take it, so we took that business. This is not going to be repeated again. So actually, you will see a slight dip in the revenue also in the coming quarter because this business will not come back. And the drop in margin was because of this, and because this will not be sold again, the margin percentage will go back up in the next quarter.
So that means to say that sequentially in third quarter and fourth quarter, our revenue will dip with a lower volume, but our margin will improve. Is it fair to assume?
Exactly.
Yeah.
Exactly.
Yeah.
Yes, the revenue will be slightly lower than Q2, but the margin percentage will go back to 37-38%.
So, and in terms of the loop, now we have indicated in the next 18 months we'll be commencing the production. So just wanted to understand how much we have spent till date on the same.
Right now, we haven't spent much at all. The company has just been formed, and now the funding will start. And now the next step will be, we've already given the engineering contract to Tata Consulting. So the expenditures are now going to begin. Nothing has happened till now.
So for 25 and 26, what shall we assume as far as the capex on the loop business?
Sorry, say again?
For 25 and 26, for the remaining half of this fiscal, for the next fiscal, what will be the capex for the loop?
See, the capex for loop is $165 million, which is about 1,450 crores. And this will be spent over a period between now and October and June 27.
Yes, I agree, but I mean, in terms of the spending, actual spending, I mean, are we going to spend major portion in the latter half of towards the commission?
The major portion will be spent after third quarter of next year.
Oh, okay, sir. Okay, sir. That's all from my side, and thank you and all the best.
Thank you. Next question is from the line of Aman Kumar Santhalia from AK Securities. Please go ahead.
Yes, sir. What are the chances that the government will implement this recycling by 1st of April 2025?
It's already notified.
Yeah, it's notified, but is there any chances that they will change the dates again?
I cannot read the government's mind. But it has. I don't think so, because if they had to give extension, they would have already done it by now. Not now. Only 4 months are left. I don't think now there is any. The chances of it getting extension is low, I would say, in my opinion. But it's the government. Anything can happen. But we doubt that it will happen. Because this is now, sustainability is a very strong requirement everywhere across the world.
And India has made commitments on.
And even India has made commitments, and our Prime Minister is so clear about it that he is, the sustainability project will not be postponed anymore.
So what are the chances that it will improve the demand of the BOPET?
We feel so, because I have said this before. Polyester film is the only substrate which can offer material with recycled content. BOPP, it's not possible.
Right, sir. And sir, a lot of companies are setting up plants overseas. So what are the benefits they are getting instead of setting up a plant in India?
Which product are you talking about? People are setting up projects.
BOPET and BOPP film like SRF, like Polyplex, like Uflex, they are setting up plant outside India.
Oh, no. I think you got your information wrong. No more new lines are coming up by any of these companies, except for one line by SRF, which is setting up in India of BOPP. No new polyester expansions by any Indian company have been announced by right.
SRF is also BOPP.
And SRF is also BOPP in India, not BOPET.
Not BOPET. And sir, what is the current spread at the moment? Previous quarter it was 45 rupees. And what is the spread currently in the month of November?
Yes, it's about 45, 47 rupees, 48 rupees right now.
And it's quite stable here.
Yeah,
it's stable.
Okay, thanks a lot.
Thank you. Next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, Singhania ji. Namaskar, Rastogi sahab. Thank you for this opportunity, and thank you for a very detailed investor presentation, and also the description given there in line by line explanation. It clears maximum questions, sir. We hope the continuity of the quality of presentation to continue, and kudos to the team for the same. Sir, first, when we look at your capital work in progress.
Saket, sorry to interrupt you. We are losing your audio.
Now can you hear me, sir?
Can you please speak through
Hello?
the handset?
Yes. Just a second. I'm with the handset on. Give me a second.
Hello?
Now am I clear, sir? Hello?
Yeah, go ahead.
Yeah, you're clear now.
Yeah. So, I was looking at the closing work, capital work in progress, closing balance of 85 crore. If you could just provide the breakup of the same, since for this quarter it is only it is in the purchase of property, plant and equipment. So if you could just provide the breakup, and when, where is this money being spent?
85 crore, I don't know where
Where you got this number from?
Yes, I'm giving you the number, sir. This is in the consolidated statement of account for the balance sheet. The capital work in. Sorry, sir. I'm wrong. That's the closing balance. No.
We have placed an order for an extruder to be installed in Hyderabad for recycling of the PET, for which advance has been given. If you look at the consolidated balance sheet, just a minute.
Yeah, it is 85 crore. Yeah.
So there are advances for extruders, and then there are certain capital work in progress related to modifications in our existing Khatima plant. So there is a CP, continuous polymerization plant revamping. There is an offline coater for which advance has been given, which is, we have 3 coaters. There is an advance given for 4th coater for producing value-added films. So it is not for expansion of existing capacity, it's for downstream value-added products. and to take advantage of the plastic waste management rule, which will kick in from 1st April 25.
Correct, sir. So when are we going to capitalize these, and the benefits will start accruing when?
Most likely by June of 25.
June 25. And
Yeah.
sir, you mentioned that for this,
These are imported machines. There are machines which are under construction, so it will take about that much time.
okay. So these are this will add to our margins going ahead. This is what the
We have always maintained that we are going to focus on building up or increasing the volume of VAS products. So these actions are to achieve that objective.
Okay. What was our sales mixer in this for the first half in terms of the value-added film? Unit wise?
On a consolidated basis, we have done 29% of our volume has been in value-added and specialty products. 29% on consolidated basis.
Okay.
On a standalone industry, 33%.
Correct, sir. And with the implementation of these modifications, what are we eyeing in terms of the contribution to rise to?
40 to 45%.
Come again, sir?
40 to 45%.
40 to 45%. And this will be apparent for the next financial year itself?
No, the extruder will start up sometime in June, July. So I think we'll miss one quarter next year. And then we'll also have to see how the ramp up happens for the demand for film with recycled content. But we expect we will have a substantial number next year itself.
Okay. Sir, when we look at
Saket, sorry to interrupt you. Can I request you to come back for a follow-up question?
Ji, sir.
Thank you. Next question is from the line of Ritu Kumari from MK Investment Managers. Please go ahead.
Hello.
Yes.
Yeah. Hi, good afternoon. So I have two questions. The first one is, what are the new products in specialty polymer which you believe could do well? And the second one is, where do you see the business, the specialty polymer business, in the next 3 years, both in terms of revenue and margins?
Okay. So I'll give you an answer to that. As far as our existing specialty polymer business is concerned, we expect it to grow by about 25 to 30% year on year. And some new products are in the pipeline, some of which are under trials and qualifications with customers. One or two qualifications have already been achieved. I will refrain from talking about the exact product right now because of confidentiality, but that's the kind of business growth we expect from specialty polymers over the next few years. Apart from that, once the loop project is commissioned, we'll be doing tolling for the loop project to the extent of about 50,000 tons per year, which will give Ester a major boost in the specialty polymer business.
Conversion of certain material into polymers on job work basis.
Okay, that's quite helpful. Yeah, thank you so much.
That's going to be a substantial volume of 50,000 tons starting around June or July of 27.
June, July. Okay, yeah, that's helpful.
Thank you. Next question is from the line of Surendra B, individual investor. Please go ahead.
Hello.
Hello.
Hello, I am hearing.
Yeah, I can hear you. Please go ahead.
Sir, good afternoon and congratulations for very good result. And congratulations to Mr. Singhania especially. So my question is that regarding in the standalone balance sheet, the top line and in consolidated top line, the difference is not reflecting about sales of Ester Film Tech. That is 99 crore. Can you just elaborate that point?
So there is in consolidation, there is a certain amount of sales made by Ester Industries of polyester chips to Ester Film Tech. So when you consolidate the accounts of two companies, the intercompany transactions are eliminated. So the sales made by Ester Industries to Ester Film Tech was about 75 crore, which has been eliminated.
Okay, sir. Sir, number one, another point is that, sir, have you any identified location for our JV project?
Yes, in Gujarat. It will be in Gujarat.
In Gujarat. And sir, what I am telling that regarding this specialty polymer business, we are now in the presentation you are showing only two items, that is PBT and one more, the MB3003. Is there any more items that is under our sales?
You see, we have only mentioned two because these two are the biggest. There are many other products which have smaller volumes, so we haven't, because if I start mentioning all the products, it doesn't make any sense. We just mentioned two of our major products. Apart from that, we have 5 or 6 other products which are being sold, but in smaller volume, and there are 2 or 3 other products which are under qualification right now, which are new products.
Okay. Sir, all the best for your new JV. Thank you very much.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Aditya Vora from Share India Securities. Please go ahead.
Good afternoon, Arvindji. Congrats on a great set of numbers.
Aditya, sorry, you're not very clear.
Can you hear me now, sir?
Yeah, I can hear you.
Good afternoon, Arvindji. Great set of numbers. Sir, I have 2 questions. One is we export the specialty polymer business. I think majority of it is exported. So are we facing any issues in terms of logistics costs going up or the logistical delays?
The logistics cost had gone up, but our specialty polymer is done on FOB basis, so that it really doesn't matter. Everything is a pass-through. If the freight rates go up, it gets passed through. If they come down, it gets to them. So we supply on FOB basis.
Right. And so secondly, I was looking at your margins. Your commodity margins are at the polyester margins are at 8% in this quarter. Logically, how do we see that over the next 2-3 quarters? I mean, you mentioned that you are at 45 rupees per kg in terms of gross pledge, but because in COVID we did up to 20-22% EBITDA margins. I understand that is not going to come back, but how do we see margin ramping up going ahead?
No. So like you rightly said, and I said it before, the margins we saw during COVID period, we don't expect them to come back, at least not in the near future or the medium-term future. And I think for the margins we have today of 45, 48 rupees are in any case very, very healthy margins. And for the moment, we don't expect these margins to improve any further. The margins are expected to remain at the same level. Only thing that will happen is that capacity utilization will keep improving between now and the next, literally quarter on quarter.
And that will result into improved margin.
And that will result into improved profitability.
Right. So basically the polyester business operating leverage will play an important role, and the margin expansion could come from your specialty polymer business, right?
Yes. But please understand, there are 2 separate businesses, Aditya. So the specialty polymer business will keep growing in volume, and polyester film business will also keep growing on volume because the capacity utilization will keep improving. But the margin per kilo is not expected to improve in polyester film business.
Okay, sir. That is helpful.
Yeah.
Thank you. Next question is from the line of Yash Deria from Maximal Capital. Please go ahead.
Hello. Good afternoon, sir. Thank you for the opportunity. Sir, I just joined the call a little late. So
I can't hear you. You're breaking up. I can't hear you. You're breaking up.
Hello. Am I audible now?
Yeah.
Yeah. Good afternoon, sir. Thanks for the opportunity. I joined in a little late.
Yash, sorry to interrupt you. Can you please speak through the handset?
Is it now audible?
Slightly better.
You're echoing a little bit.
Hello.
Hello.
Hello. Is it now better?
Yeah, better now. Go ahead.
Yeah. Sir, good afternoon, sir. I joined in a little late, so my question could be repetitive. Sir, I just wanted to know industry-wide update on the polyester business. So, any capacity which is going to come in near to medium term?
No, I mean we have one line which is already started up a month, 2 months ago. And apart from that, the next line is expected to start up only in early 26. So, and by that time, the demand is going to grow substantially. With the current demand growth, we will need 2 lines every year, 2 new lines every year, 26 onwards. Otherwise, there will be a shortage.
And in industry, you are saying that the new line which is going to come is now going to come in FY26.
Yeah, late 25 or early 26. I'm not sure, but somewhere there.
And is it substantial?
Sorry?
Is it substantial?
Sorry, I can't understand.
Is it the new line which is going to come, is it huge?
No, no.
Same size. All the lines are same size now.
44,000 tons per annum capacity.
Okay. So this line you are talking about for us or for the industry?
I'm sorry, your question is not, I am not understanding your question.
Hello. This line you are talking about, is it for us or for the industry?
It's not for us. It's somebody else is putting it up.
We are not expanding.
We are not expanding anymore in our capacity.
Understood. Understood. And so, then I'm not able to comprehend why we don't foresee any rise in margin when the consumption is going to go up and the new capacity is not going to come.
Excess demand. There is still excess supply over demand, na?
Understood. But then that gap between demand and supply is also narrowing down.
It is narrowing. It is not finished.
Correct. So margin which were there 6 months ago and margins which are there now have improved.
Sorry, I can't understand your question. What is your question? I am really not unable to comprehend your question.
No. So margins which were there 6 months ago and margins which are there right now have improved.
Yes.
Yeah. That has been the case even when the supply was more than the demand.
What is the question? Again, I am not able to understand your question.
No, I'm just not able to comprehend why the margins would stay where they are and only the capacity utilization will improve. I mean, the capacity utilization was never the constraint 6 months ago as well.
Baba, that's what I'm explained. It is our projection that they will remain stable. Actually, if they go up, we don't know. But as of now, we expect it to remain stable.
Okay. And sir, in our specialty, this mix of specialty products in the polyester business, so how do we see it improving?
See, Pradeep just mentioned a short while ago, I don't know if you were there on the line. Right now, we are doing about 30% value-added products, which by March of 26, we should be at about 40-45%.
Okay, and the margin for this business is sustainable irrespective of the commodity prices?
Yeah, largely.
And what is the delta?
Various products have different...
On an average for us, what would be the delta, say for the key products?
So I'll give you just the proportion in the volume and the value. So like 30% of the value-added products have given us 45% of the contribution in the sales. So that gives you an idea of what kind of margins could be there in value-added and specialty products. It ranges from 50 rupees to 120 rupees also.
Understood, sir. Understood. And sir, one last question on, I just wanted to know that there are several players in this industry and everyone is having different capacity utilization. So for example, some of our competitors are running on optimum utilization and some of our competitors are running, say, maybe on 50-60% as well. So going ahead, do we see an excessive ramp up in the capacity utilization from those players and somewhere...
I don't know where you're getting the capacity utilization number of individual companies. We don't have it.
No, not all the companies, but few players who are listed at least.
I don't know. I can't predict the capacity utilization of my competitors.
We can share our numbers.
There are numbers. I can't talk about others.
Okay, sir. Okay. Thank you so much.
Thank you. Next question is from Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Sir, can you provide me with the net debt number on a consolidated basis and also what are our current maturities? Yes, sir.
So the term debt in Ester Industries, interest bearing is about 181 crores. Ester Fintech, it is 350. So total 530 crores. Working capital, both the companies put together is 197. That makes it about 725 or 730 crores of debt. But we have net cash of about 74 crores in the balance sheet. So we have net debt of 650 crores. And the repayment obligation going forward from next year onward would be about 35 crores in Ester Industries and about 50 crores in Ester Fintech. So the repayment per year on a consolidated basis would be about 80 crores.
Right, sir. And for this loop JV part, sir, what would be the ratio of investment money? How much will be invested by Ester and then our partner?
Equal. It's a 50-50 joint venture, and both of us will be investing about 250 crores each in equity.
Okay. And when will be the first tranche of money will be made available, sir? When will we drawing that investing our money? 250 crore will be at one go itself?
No. So it'll be done over a period of the next. As per requirement, we'll keep on investing. The first tranche of investment that we expect to make is in the second half of November.
November 25.
In the second half of November. This month.
Okay, this month itself. And what would be the amount, sir? How?
The first investment by Ester and by Loop into the JV will be made in this month between 15th and 30th of November. And we expect the first tranche of investment will be between 25 and 30 crores each.
Okay. Right, sir. Okay, sir. Thank you for all the answers, sir. And for the raw material mix, Rastogi, if you could give me the trend for the MEG and the PTA prices.
PTA and MEG both are quite stable. In international terms, dollar terms, 700 is the range for PTA, 550 is the range for MEG. On a per kg basis, currently the PTA is about 75 rupees and MEG is about 55 rupees.
Correct. Thank you, sir, and all the best. We hope for consistent set of results going ahead as alluded by you.
Thank you.
Thank you. Next question is from Surendra B, individual investor. Please go ahead.
Hello.
Yeah, go ahead, please.
सर मेरे को ये लूप जॉइंट वेंचर में अपने sourcing of raw material will be from where?
So all the raw material is scrap, kachara, polyester scrap of all kinds. So it will be bottle scrap, it will be textile scrap. The whole project is based on sustainability. Is to be able to consume scrap and make it into virgin quality material.
Will that much amount of kachara available right now?
Yes. We've done our survey already, and there is plenty material available.
तो सर मैं आपने अभी बोला था कि आप वो अपने जो स्पेशलिटी पॉलीमर में 50,000 टन का आप मैंने प्रोजेक्ट मैंने तो लूप जेवी के साथ करेंगे तो मैंने इसका प्रोजेक्ट भी आप गुजरात में ही रहेगा
सर
आई एम टॉकिंग स्पेशलिटी पॉलीमर
So specialty, yeah, we are shifting the specialty polymer from Khatima. We are going to be shifting it right next to the joint venture because we are going to be tolling and doing job work of such a huge volume, 50,000 tons per year. It doesn't make sense to transport 50,000 tons from Gujarat to the north and bringing it all the way back when everything has to be exported. So it is cheaper for us to shift the entire operation from Khatima and locate it right next to the JV company.
Especially polymer operations.
Only specialty polymer operations.
सर अभी आपने वो अभी यही कंसेप्ट में आपको पूछा था कि अभी आप वो अपना जो मैंने पॉलिस्टर बैचेस जो है आप जो अभी अपन खतीमा से हैदराबाद ट्रांसफर कर रहे हैं रॉ मटेरियल तो इज इट वाइबल
अरे सर जी प्लीज अंडरस्टैंड हैदराबाद से फिल्म बिजनेस है
हाँ फिल्म बिजनेस है लेकिन उसका बैचेस आई एम सेइंग रॉ मटेरियल Sir, semi-finished product you are transferring from Khatima to...
एक मिनट, आप जो हमारी महीने की रॉ मटेरियल की रिक्वायरमेंट है वो करीब 20 से 25 करोड़ रुपए महीने की है एस्टर फिल्म टेक में। हम थोड़ी सी क्वांटिटी अपने यहाँ से भेजते हैं खटीमा से, बिकॉज वी हैव कैपेसिटी अवेलेबल एंड मार्जिनल कॉस्टिंग पे इट इज वायबल एंड major portion of the chips that we need at Hyderabad are purchased from Gujarat based suppliers.
Okay, thank you sir.
पूरा नहीं है, 25 करोड़ नहीं है पूरा महीने का, हम 7-8 करोड़ महीने का बेचते हैं बस।
बट ये ट्रांसपोर्टेशन वाइबल है क्या सर? नहीं,
क्या वायबल है,
बिना वायबिलिटी के क्यों करेंगे?
मार्जिनल कॉस्टिंग के कॉन्सेप्ट पे चल रहे हैं, वायबल है।
ओके सर, थैंक यू।
Thank you very much. As there are no further questions, I will now hand the conference over to the management for closing comments.
Thank you very much for joining us for the investors call for Q2FY25, and we look forward to seeing you for the next Q3 call in January. Thank you.
Thank you. Thank you.
Thank you very much. On behalf of Ester Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.